You mentioned something about the bull market, right? And you were saying that you think that there will be a day where the Jamaican market has a bull market. What do you think
Absolutely.
would be like, what would be some of the things that you think would cause that? Like, if I'm an investor and I'm trying to position ahead of the bull market so that I am in companies when a lot of people then want those companies, I can sell to them. What do you think would trigger that?
All right. Three things drive a bull market, in my experience. Firstly, participation of new investors slash new money. So if there's a paradigm shift around that, and you have a lot of persons who are coming in who weren't invested before,
Hmm.
then that is one condition. Another, and the most important, is actually liquidity. So when you have the benchmark interest rate from the central bank, BOJ, falling, what it means is that institutional investors will have to move their money away from money market instruments, stop rolling their money in the CDs, and put some more on stocks. Because again, they have to balance risk and return. So when those yields drop, they're gonna have to find yield elsewhere. So they have to gain more stocks that have dividends so they can pick up more yield, what they call yield pickup in asset management. As stock yields become more attractive, they're going to buy more stocks. That's going to push up the prices. Retail investors are going to respond to that because one, they'll be able to get volume from these big buyers, and two, there's upward movement, which pushes sentiment. So there's a whole momentum aspect of it. So the retail investors, so it's BOJ first, then the institutional investors, then retail, then the rest of the latecomers will drive that. Then the last piece is the earnings environment. So right now we're going to be in a snag in terms of earnings overall because again we're going to have transition period, a lot of assets moving around. It's kind of an awkward situation. There's a lot of uncertainty. Not a great time for earnings, but you can pick early winners based on their capital, and you have to watch capital. This is a balance sheet and cash flow situation. It's not a P&L situation. But most investors watch P&L. A lot of people just look at the PE and look at the EPS and say, hey, yay or nay, just based off of that. So how can you take it a step further? By being strategic now and getting ahead of that. So once those conditions align, low interest rates, institutional investors coming in, there's new money and there's an improvement in earnings, then you will definitely have a bull market. And I think the next bull market is going to be bigger than the next because our generation has a greater level of equity participation than the ones before. We have a different attitude towards stocks. We see stocks as more of a necessity than
Yeah.
they did. They were just like, stocks are nice to have. We don't look at stocks as a nice to have. We're like, yo, if you're not buying stocks, you're signing up to play the game on hard. That's how we look on it. Now, I would never make the case to say, and this might be for a new listener coming on, and they might have heard, hey, real estate is it. And I don't want that statement to sound like I'm telling you that stocks are better than real estate. I think everyone, as a matter of fact, should take a portfolio approach, not just in terms of one asset class, but multiple asset classes. So how can my stocks help me to reach my real estate goals? And how can I monetize my real estate to build my stock portfolio? It's working them together as opposed to saying, real estate is the best asset class